Hello, this is David Zai with the Zai Mortgage Team, and today we're going to talk about getting a home loan with less than 2 years of work history. And I'm going to share with you some expert tips and insights, the myth that is out there that you have to have 2 years of work history or with the same job. If you're dreaming of buying your own home right now, but you're kind of worried about getting a home loan because your work history has been kind of sketchy or you have less than 2 years of work history, well, you're definitely in the right place, because in this video, I'm going to share some tips on how to navigate the situation successfully. So number one, we're going to talk about what is 2 years of work history, right? How does a lender view the 2 years of work history? That's stability. If you've had been working for 2 years, regardless of how many jobs you've had, that's totally fine. Okay, you could have had 4 or 5 jobs because maybe you just finished school and then you started working as a intern at a place, or maybe a low-level associate at a place, and then you kind of found an opportunity to kind of increase that pay and make things a little better. So you switch jobs and you do that again a couple more times. And you may have called certain lending companies and they're like, hey, your job stability is just not there, so we can't work with you. Or maybe you've read online somewhere that, hey, your job history has to have 2 years. And when you read that 2 years, you're thinking, I have to be on my job for 2 years. Well, that's absolutely not true. So providing that stability, when we see 2 years of history, even with kind of limited work history, you can kind of show the lender that you have that stable income, right? Just make sure you're working consistent hours. If you're on a fixed salary, then that's the best that we can use. That means we have a certain amount of guaranteed income. And if you provide us with things such as your employment contracts, your offer letters, or even proof of consistent freelance work, we can kind of put everything together and put that puzzle together for the underwriter. But it's all about demonstrating your ability to repay a loan. So with that being said, let's talk about this. We have the history of employment, but guess what? If you were a student before going to work, we can use that college history as well as part of your employment. Or maybe if you're graduating from high school and then you had some work at maybe some fast food, maybe at one of my first jobs was I was working at a baseball stadium as the condiment guy. And then I slowly progressed into waiting tables. And then finally, I got into a hourly plus commission position. And that's really what helped me secure that first home, was the ability to use my hourly rate to secure the first home, which was $75,000. So I really didn't need a lot of income for that. And with the down payment on an FHA loan at 3.5% down, it made it very, very affordable. Tip number 2, I would say, is to build solid credit history. The more solid the credit history is, the more the lender is willing to kind of make an exception for constant job changes or even gaps in employment. And your credit score is kind of determines your financial responsibility. When we're doing a loan and we're submitting a loan into underwriting, the underwriter is always going to look at, what is their ability to save, right? That's number one. How much of a gap in employment did they have, and what was the reason for the gap and why it won't happen again? That's number 2. Number 3 would be, how much do you have saved up, right? Because if you have no housing expense or you have a minor housing expense with an increase in housing payments, how much have you been able to save up, avoid overdrafts, and just be real responsible with your money? Paying your bills on time is very, very crucial. I would say that would be the number one thing when it comes to building credit, because even if you had 10 years of good payment history and your credit score is at 800, guess what that one late, in the most recent month, can really do to your credit score? It could have the impact of dropping that credit score by hundreds of points. Make sure you pay your bills on time, keep your credit card balances low, and avoid taking out any additional new debt, because even though it may not seem like a big number to you, and I've seen this a lot with people going under contract on a home, getting ready to close. And as a lender, we always pull credit within a couple of days of closing. And when the processor goes and pulls the credit report, we're going to see things on there like, hey, you applied for new credit, right? even though it wasn't on your credit report, we do a soft pull, and on that soft pull, it'll show us the inquiries. And if it showed like 4 different inquiries, let's just say 2 furniture stores and 2 auto loan places, and you took out a new furniture bill that's $150 a month, and then you take out a car payment that's $400 a month, now we have an additional $550 in debt that we have to count against you. And guess what that does? Affects your debt to income ratio. Sometimes it could be as extreme as causing you not to be able to qualify. So it's really important that you build that solid credit history, maintain it, and keep things consistent, because nobody likes change. Tip number 3 would be save for a large down payment. Saving a substantial large down payment can definitely compensate for shorter work history. A lot of times with shorter history and larger down payment, once again, we can take some of those assets and maybe divide that out by 360 months and say, hey, you know what, they have this additional income. Or we could take those additional assets and say, hey, because they have challenges with their work history and gaps in employment or whatever, if you have that large amount saved up, we are looking at cash reserves. That's what underwriters are constantly looking for, right? If you look at it like a seesaw, okay, how many bad things do we have right here? So it weighs down this part of the seesaw. However, if we start having some good things like good payment history, more money saved or large down payment, it's going to start balancing things out, and maybe even like balancing it out in a space that's way more favorable for you. And then tip number 4 would be to seek assistance from a mortgage broker. Everyone's going to calculate income differently. And, with mortgage brokers, we shop multiple investors. We have multiple underwriters look at it. And what typically happens is we can submit a loan, let's say to 5 different investors. And I can pretty much guarantee you, everyone has their income calculation worksheet. And, the income will vary to some extent between the 5 different investors. And what we're going to weigh out is what the income level is, what the interest rates are, and then when we merge it all together, we can kind of decide what would give you the most buying power or the most affordable buying power. So working with an experienced mortgage broker can certainly be game changing, because we do have access to a variety of lenders that we can kind of help match with you for the loan products. Let's talk about tip number 5. Gaps in employment. Gaps in employment are really a big thing, right? However, you got to have a good reason for having the gap in employment. Good reasons would be illnesses. Maybe you had to take some time off to take care of a family member. You had a lot of large expenses that may have popped up that if you would have hired somebody, it would have cost you $100,000. So you took off 2 weeks, and because of that, it only cost you like $10,000 to fix that issue, right? As long as we have those letters of explanations kind of worked up in advance, a lot of times we can overlook a job gap of 6 months, right? 6 months is typically the key. I've had a job gap. I'm back in my employer for the last 6 months, and that's good, right? You're definitely able to do the loan. However, if you're back for less than 6 months, work with your mortgage broker to get the file into underwriting with the letter of explanation, and at least have them underwrite that portion of the loan to kind of tell you with that job gap and the letter of explanation if they will take that as an acceptable form of explanation, just to see. And I wouldn't really worry about the amount of job gap either. If you're back at work for 6 months, you could really have even a couple years of job gap. So I recently did a loan for someone that was incarcerated for 4 years, and they've only been back at their job for a couple months. However, during the incarceration, there was certainly some employment, and prior to that incarceration, there was a long history of employment. So when we submitted that loan over to underwriting, up front, the first thing we did was we pulled the verifications of employment. We put everything together. And this is really important. We took a lot of mortgage notes for the underwriter. So when we submitted the loan, it actually came out very clean with the approval. So with that being said, to recap, build solid credit history, provide stability or prove your stability, save for a larger down payment, debunk all the myths about like having to be at the same job for 6 months, and seek assistance from a mortgage broker, because following these tips will definitely increase your chances of success and securing that home loan that you want, even with less than 2 years of history. Also keep in mind that schooling definitely helps with that. So with that being said, I want to thank you for watching this video. Thank you for the growth. Please subscribe to the channel, hit the notification bell for any new additional content. We are constantly trying to produce more valuable insight and help you navigate through the world of home loans. So comment below if there's anything that you want us to talk about in the future, and good luck on your home buying journey. And my name is David Zai. I can be reached at 757-478-8493, and I'm just saying, give me a call.